Hello, everybody. Hello, CMCP members. Welcome to our program. Today's program is part of our CMCP CEB Bootcamp speaker series called Meeting Learning Objectives. And through this program, what we're going to use for technical content is an introduction to forensic accounting in legal settings and investigations. Thank you for being here. My name is Chris Davis. You see my name there. I am the managing director for the Bates Group. I'm the MD for forensic accounting, economic damages, and financial crimes at our firm. And I'm just thrilled to be here and be with all of you during this program. I work with attorneys and their clients, businesses, nonprofits, and public agencies as an independent and objective damages expert. I work on both consulting and testifying projects. And what we'll do today is incorporate my experience while we aim to give you some ideas on how to best meet your learning objectives when you are planning on a presentation, either to your clients, to colleagues, to organizations that sponsor CLE. I have spoken and presented CLE a number of times every year, so I am just happy to share what I can with all of you today. So meeting learning objectives for this purpose, please keep in mind what I'd like to do is remind ourselves, what do we want to think about before we actually present, during the actual presentation, and what do we do after we have presented? And here, I do want to share a couple of tips. Before presenting, number one, definitely work with a program producer to define the learning objectives for your presentation. In this case, I worked closely with Connie Voos, who is the program attorney, to understand what is it exactly the target audience should learn from this presentation. We talked for quite a bit, several times. We had a lead time, meaning we revisited this opportunity months ago, so we're not preparing last minute. The good thing about that is you have time to really process and digest what is it exactly I can do for this program. And sometimes that doesn't come to you overnight. Sometimes it just takes time to percolate. So I would just say lead time is important. You definitely want to outline the presentation before you put anything on PowerPoint. Usually I would use a Word document, and I would just start like knowing the objectives, have like this dirty, quick list. It doesn't have to be organized right away, because sometimes I find myself procrastinating when I'm too I want to be perfect the first go, and that's not going to happen usually. So outline your presentation, let it ripen, give yourself some time to really process what it is you would like to convey during your presentation. And number 4, I want to share, do spend some time visualizing and creating impactful slides. What I mean by that is a large part of your presentation is not only your oral delivery and your optics, but also whether the slides are supporting what you have to say and making sure that the slides are consistent with what you are wanting to accomplish for your learning objectives. Slides should be, not too crowded. Sometimes less is better, so that you're actually using slides to prompt what it is you would like to convey. If needed, and I have done this in the past, I have used a really good PowerPoint designer, especially if I wanted to make a really, really good impression. And the reality is, if you make that initial investment, which might be, I don't know, $1,500 to a couple of $1,000 for a good beginner set of slides, you can actually recreate them going forward. And that's what I've done. I invested in a good PowerPoint designer, I think last year or the year before, knowing that he actually gave me permission to just use it going forward. And he understood that I might not ever go back to him again in the near future, maybe in 5 years if I wanted a full revamp. But it's worth the time to think about using someone who is good at designing PowerPoints. And it's really, I feel that the dividends pay off for a long, long time. Before presenting, a couple more things. It's really important to solicit input from your co-presenters as well. And it's because the presentation is, from all of you. So just make sure all of you agree on the content. You take, when to take turns. If there's a moderator, you talk about the respective roles of who's doing what. And usually it's helpful to decide who's doing what slides so that it's kind of even sounds like sometimes like a very interactive, almost like a fireside chat type of presentation, rather than being stilted or too formal. Especially these days, I think that people are used to a little bit more exchange among the presenters. It makes things so much more interesting. And I would say solicit input from the program producer as well. So for example, with me and Connie Booz, we had planning meetings, we had calls, we checked, she gave me example ideas. I made sure that my edits were reviewed by Connie and CEB, and making sure that my presentation is consistent with the objectives of the program, and I'm not going to be saying anything out of line or out of scope. And it's definitely a good idea for the organization that's sponsoring your presentation or your partners, for example, that everybody knows what you are telling the audience about your content in case you are representing more than just yourself. And of course, input from trusted colleagues, I find that very, very useful. I have made sure my colleagues at the firm have seen my slides. I get input. And this is why you want lead time, because you want time for that review. You want your partner or maybe an associate just double check for spelling, making sure, you get their input, because everybody might have something really good and interesting to add to your presentation that you have never thought of, even though you may have spent, a long time on it. I find it very rewarding and just self-assuring to make sure I was able to get input from my colleagues. I would also, keeping in mind, very important, diversify the panel if you're going to be part of a panel and if you have control over the decision. If possible, diversify with different kinds of, speakers of different genders and sexual orientation or ethnicity. It's something that we are very transparently discussing these days. And it's easy to default to someone we already know has presented with us, but giving others an opportunity to take part in a panel, having different points of views, and most certainly being inclusive is such a strong message right off the bat. And I would even offer to say that more interest is generated when the announcement for a panel reflects a diverse panel. It's just very, very attractive to be inclusive and being very conscious about that decision. I am part of different CLEs as well, and I know for a fact that organizations are actively seeking diversity in a panel. And it's not always possible, I understand, if the expertise is so unique and it's so narrow to only a group of experienced people who might be over, a certain, just within a certain group, then I understand it's not always possible, but do make an effort to include as many different kinds of backgrounds as possible. It is most certainly the right thing to do, especially these days. And then be creative. When we get to our slides, I want to say, use animation. And again, that's why you want to include the input of potentially a professional PowerPoint designer, because it'll pay off in the long run. You want your fonts to be either minimalistic, or sometimes less is more, but sometimes more is unavoidable. And then sometimes images are good. Sometimes a graph is better than pure words. So hopefully, as we go through the slides, you'll see what I mean by being creative. Before presenting, last but not least, I do want to say, before I continue, I did want to say on being creative, you also do not want to go to the extreme and overdo the animation. I have seen presentations where the animation was just a bit much. So and that's why input from colleagues becomes really useful. You want to have a nice, solid presentation. Sometimes too much animation is distracting and then creates the opposite of what you intended to accomplish. Last but not least, I do want to say, practice, 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 either with someone, your partner, your significant other, your spouse, your kids, making sure they understand what you have intended to present. Great feedback is achieved when you do practice. Sometimes you might not be able to have someone else to practice in front of. So sometimes I would just practice to myself and visualize what I'm saying and take notes on the slides that I'm thinking of for that particular slide. And then incredibly, the visualization, much like when you're practicing for a sport, like if you play tennis, you're visualizing your strokes. It's the same thing. Practice is good. And then this is where you can ask yourself, did I actually achieve my learning objectives when I presented to myself or to my significant other? Ask them, so let's go back. Did we achieve the learning objectives? Did I present what I wanted to present, but did I call it something different? So is my learning objective actually not worded correctly, and vice versa? So the practicing is really important. And I did want to add as well, in learning objectives, you also look back to your title. Sometimes we forget that the title might be something the organization gave us, but is it still consistent with the content? So title, learning objectives, all of those things, and the content, practice that before you actually present. Now, during the presentation, and I'm aiming to illustrate some of these. We want to help the attendees follow the outline. So for our example, I don't have an outline for you, but sometimes an outline is useful, by making, giving the attendees a heads up of what you are going to present. You want to keep your slides clear and concise. We've touched on that a little bit, but certainly let your delivery do the talking and the educating, rather than your slides doing the work for you, because a lot of the time the value for your presentation is what is coming out orally from you during the recording or the live presentation, the way you you look at the audience or the camera, your hand gestures. So you want to make sure the attendees are with you. In other words, use examples, and we're going to have certainly a good example as we move forward. You want to walk through complexity. So if there's any calculations, you break it down so that at the end of the day, you don't really need to talk about everything, but you just talk about enough to achieve your learning objective. So here, we're going to go over what is actually a very complex lost earnings calculation, but you'll see that when we get there towards the later part of our program, I have simplified what could have been a very complex presentation, because I'm thinking in terms of, I am presenting this to the jury. We're going to talk about an example that I actually presented at trial. They don't really need to know the details of the calculation. They just need to know enough about what they can learn from me, the presenter or the testifying expert, for them to conclude about whether my damages are reasonable or not. Checklists are usually useful as well. So in your presentation, you might have a checklist format where you are reminding your attendees, these are the things we want to accomplish today. So making sure the attendees are with you during the program, that's the goal of item number 1. If this is a live presentation, I would encourage audience participation. So, instead of just me doing all the talking, sometimes the program sponsor would encourage the audience to participate. Now, if you're presenting to a client, for example, and aiming to persuade them to retain you, it's a perfect example of wanting to elicit participation. It breaks up the monotony of the program or the delivery, but also audience that's engaged is so much more encouraging as you go along in the process. And it's also an indication of whether or not they are learning something from you, and a strong indication that they are interested in what you have to say. And number 3, it's very important to remember we are presenting. For example, I am presenting to you right now. What I don't want to do is reading a bunch of text where you can do that reading yourself, but instead making sure I talk about what the slides are intended to convey. The slides, as you know, are supposed to be supporting you. You are the star of the presentation, not your slides, but at the same time, keeping in mind, you don't want your slides to detract from how great you are. The slides should help bolster your impressiveness. So the point being, you can also have a really good oral presentation, but if your slides were so crowded or so confusing, or if they ended up being a distraction, it kind of took away from all of that great presentation you had planned to do and did do. So keeping in mind, slides are intended to support you. It's okay to read, but don't make it like it's the actual presentation without your help. You're actually there to do the oral delivery. So let's do some principles in action. Let's see some of these here. We're now on slide 7. So for example, let's say I wanted to present to you my professional qualifications. Let's say you are a potential client, or conversely, assume you are presenting your professional qualifications to a potential client. Here's what I would have in a text version: 2 long, crowded paragraphs. Do I really want to read through this? I don't even want to show this right now, but I'm doing it for illustration purposes. It's too much to read. It's crowded. This is more appropriate for the website, isn't it? So how about an example of my bio that incorporates breaking down the details real quick to show you that I am a retained I am retained as a consulting and testifying expert in many fields. These are all my experience cases that I worked on. And I do talk about the fact that I have speaking, I'm a frequent speaker and writer on economic damages and too much, right? So let's do this. Here's example number 2. I think it's just so much better to break down all of those things. I have my name here, my title. I have 24 plus years of consulting and testifying experience. I used animation to show each of these bullet points real quick. Keeping the audience engaged, which I'm hoping I accomplished through that slide. You looked at the bullet points real quick. And then the list appears as one in one page. And I have many, many presentations over here. So that actually summarized my experience, but in a much better method of breaking up all that detail using appropriate animation and proper timing. So let's go to the actual example using technical content. So as you know, to get CLE credit for this program, we do have to incorporate technical content. So what I'm going to do is incorporate the topic of forensic accounting in litigation support and investigations. How do forensic accountants support litigation and financial investigations? That's going to be our first learning objective. So pretending I am presenting to you, and what I'm going to do as well to make this a bit more effective and interactive, I'm going to mix in the part where I'm presenting technical content, but then you'll hear me say, now let's step back and let me talk about how we achieved the learning objectives in this slide. So here we've got 3 learning objectives, okay? The first one, we're going to describe, when we're done with this program in forensic accounting and lit support and investigations, the audience would be able to describe how forensic accountants support litigation and financial investigations. Learning objective number 2, you should be able to define forensic accounting and accounting fraud once this program is over. And learning objective number 3, using a case study, you'll be able to recognize the application of forensic accounting in calculating economic damages. Okay, so by the way, you might be interested to know or ask, maybe you're asking, how did Chris use this pointer? All it is, in presentation mode, press on Control and click on the left mouse. Okay, so the left panel of your mouse. So I think that this is really cool to use, especially if there's detail on the slides that you want to keep your audience engaged on because of all that detail. It's very good to use the pointer. So learning objective number 1 is learning what defining forensic accounting. We're going to describe forensic accountants, their role, how they support litigation and financial investigations. So this is the first slide. What is forensic accounting? It is, I'm paraphrasing, by the way, a definition from the AICPA. It's a thorough investigation by an experienced CPA to collect, analyze, and evaluate financial records and data for the purpose of interpreting it and communicating the findings in a courtroom, boardroom, or some other venue. So here you can see that forensic accounting is different from auditing. It's different from tax. It is investigative because it requires an investigation to collect and analyze data. And the work product is interpretation, communication of findings. So right off the bat, forensic accounting has to do with litigation support, and investigations. These are the two main umbrellas under which forensic accounting is used, either in litigation where a forensic CPA is retained as a consulting or testifying expert, or in investigations where the forensic CPA is hired as a forensic accountant to investigate some issue. Now, I do want to say usually when people hear the term forensic accounting, they automatically default to fraud. When, there's a fraud investigation, someone stole money. But actually, you can see here, that is just one part of what a forensic accountant does. It's very important as well to remember that the AICPA, who is the authoritative national membership of, it's the organization that is the standard setter for accounting rules and so forth. And it's been established since the 1800s, I think 1880s, in the 1880s. They have a certification for qualified forensic CPAs called the Certified in Financial Forensics. So I would also I want to make a distinction that you might hear of professionals calling themselves a forensic accountant. It's further distinguished from those of us who are actually CFF, Certified in Financial Forensics, within the AICPA's certification guidelines. So I would just be careful about when you hear someone calls themselves a forensic accountant, just make sure you are looking into the further credentials of that person, because there are different levels and levels of experience in that field. So here, I did want to share what is for a forensic accountant's specialized knowledge. So according to the AICPA, the forensic accountant can serve in many capacities. Whereas you might have thought it's just fraud here, forensic accountants serve as damages experts, and we're going to talk about a lost profits damage calculation as an example later on to achieve our learning objective number 3. You can have lost profits damages, lost earnings damages for employment issues, intellectual property damages. A forensic accountant can also be retained as a accounting expert that is retained to explain or decipher accounting violations in financial statements. Are the financial statements, were they prepared in accordance with generally accepted accounting principles? Similarly, the standard of care for CPAs is a typical case that I have worked on where the financial statements actually contained accounting errors, and the CPA firm is alleged to have failed to detect those errors, and the CPA firm then becomes a potential defendant in an accounting malpractice case. That is something that forensic CPAs who focus on accounting issues work on as well. Forensic accountants can focus on bankruptcy, insolvency, and reorganization. There are some forensic CPAs out there who do nothing but this work, where they help in that reorganization issue for businesses. Forensic accountants also do valuations in a litigation setting, or maybe not in litigation settings. So, I also have a valuation credential, you might have noticed. And then fraud prevention, detection, and response, which is what typically people think of when they hear forensic accounting in layman's terms. And then family law, there are forensic accountants out there who focus on assisting in deciphering the marital assets that have to be allocated between spouses. So you can see a forensic accountant can work on different kinds of cases depending on their expertise. So continuing on forensic accountants in litigation, A forensic CPA can be a consulting expert or a testifying expert. With that said, the expert can work on economic damages issues, in which case she or he would be an economic damages expert. Or, like I mentioned, there could be accounting issues in the project. I would then be serving as an accounting expert if this is my project. Or if the issues pertain to valuation, then my valuation credential would be relevant. And if it's not necessarily a litigation yet, but it could become a litigation, we could serve as forensic CPAs and fraud investigators. So here, what I like about this, speaking of creativity, this is something that the PowerPoint designer helped me put together. He did this for me a couple of years ago because I said, look, I'm making a presentation and I just want a nice graphic that depicts everything that I do in my work. So this is creative, don't you think? It has first the consulting and the testifying expert shapes here, but then it's showing the subsidiary roles in a different color, but it's sort of like a subset with the green outline connecting the main roles with the orange or brown subsidiary roles or assignments. So I love this graphic. I think it says everything. It's almost like I don't have to say much, but I do want to elaborate on it. But this is an example of what a PowerPoint designer can do for you. So let's recap. Our learning objective number 1 was to describe how forensic accountants support litigation and financial investigations. So through focusing on slides 12 and 15, I have concluded, and I hope you agree with me, that I have fulfilled learning objective number 1. And I hope that you have as well. So in rehearsing for presenting, it's really important. Give yourself feedback when you're practicing. Did my slides accomplish learning objective number 1? And I believe that we did that in this example. So we're going to proceed. As you might have guessed, we are now going to go to learning objective number 2, which is defining fraud in accounting terms. So I did want to say here, let me just recap here. Our learning objective number 2 is defining forensic accounting and accounting fraud. So keep in mind, my goal is to accomplish that. So what is fraud in accounting literature? And going back now to my technical content mode. So fraud is defined in 2 ways in accounting literature. It's either financial statement fraud or misappropriation of assets, meaning embezzlement or theft, which directly impacted the financial statements. So this is not surprising, right? So maybe in your mind, outside of the world of accounting, fraud could include something that you wouldn't immediately connect to financial statements, like corruption, for example, vendor fraud, fraud in applying a federal grant, a misapplication of funds, for example. But in strict accounting literature, which is in the auditing literature, fraud is defined in terms of financial statement fraud or misappropriation of assets, okay, which in turn impacts financial statements. So let's talk about that further. But before I do this, I want to say in financial statement fraud, what are we looking for here? What we're going to do, though, is I want you to compare this slide, and I have number 1 because this is a static slide. But let's go back to the prior slide When I click here, you see that you immediately see all of the content, okay? What if we did version number 2, and let's go there. Same content, but what I did there is I added some animation to make sure it's interesting content for you to look at. It's really nice to see the appearance of content rather than it being all there all at once. So financial statement fraud, let's go back to technical content, pertains to intentional accounting errors. For an accounting error to be fraudulent, it has to be intentional. Okay. Now, as the accounting expert, it is not up to me to define whether the accounting error was intentional. Sometimes that is best left to the trier of fact based on the evidence that I would put forth. Sometimes, though, I might say, I am almost certain this accounting error was intentional because of the overwhelming evidence that tells me that the accounting error was based upon a knowledge or intent to understate something. Because it just happened too often. There were other corroborating examples that demonstrate intent. So, but at the end of the day, for the accounting error to be fraudulent, it has to be intentional. What are examples of accounting errors, though, whether or not they are intentional? I want to say here, overstated revenues and overstated assets are typically accounting errors. In fact, something that's overstated or understated is the state of being wrong in relation to what the correct amount is. So what the point being is, what do you look for if you are suspecting financial statement fraud is occurring? I would look for errors that tend to increase the bottom line. So what are those red flags that typically increase the bottom line? It would be an overstatement of revenues and assets, okay? And it would be an understatement of expenses, liabilities, and asset reserves. And why is that, you ask? That is because an overstatement of revenue and assets results in increasing the bottom line inappropriately, and understating these items results similarly in bolstering the bottom line. So if you're saying to yourself, I need to know if there are any red flags that seem to be indicative of fraud, it's a natural inclination to start with the motive to increase the bottom line. And therefore, you would look for these things. But, the opposite can be true. There could be a management motive to understate the bottom line for some reason. Maybe they are desiring to instead have such a rosy, high bottom line increase for the next period, and so they are then maybe intentionally understating performance for the current period to make it look as if the following period was a result of super great, amazing performance levels. So the opposite can be fraudulent as well. And another example of an accounting error, and it would be fraudulent if there's evidence that it was intentional, it's not only the actual numbers themselves, but disclosures as well. So for example, accounting rules require that if there is a pending litigation and there is what's called a reasonable possibility that there would be an adverse outcome, that case, that event, that litigation matter should be disclosed in the financial statements. And it should actually be booked as a contingency which is a direct impact to the bottom line, if the likelihood is probable. But if it's not yet probable, but only reasonably estimable, which is a legal opinion for the most part, it needs to be disclosed that the company is subject to a litigation and there is a possibility that there will be an adverse outcome. So that is an example. That is financial statement fraud. It's an accounting error or errors in the financial statements that are, once again, intentional. And we talked about the kinds of errors that might occur, and keeping in mind it's only fraud if it is proven that the errors themselves were intentionally performed, booked, or created. And again, it's usually the trier of fact that is the best judge of the determination if fraud was intentional. But sometimes, like I said, the evidence is so overwhelming, sometimes I would be comfortable to say a reasonable financial statement preparer would have known that this is wrong, and therefore the only logical conclusion is it had to be intentional, especially if there are other corroborating facts in the case. So the next example that we're going to talk about regarding fraud is asset misappropriation. Asset misappropriation is a technical term for embezzlement or depriving an entity of assets that rightfully belong to that entity. So what are the red flags? When someone comes to me and says, Chris, we suspect that our CFO has been stealing for this length of time. And then what I would say is, well, I want to see what are the red flags? Why do you think that? Now, here are 4 examples of what I have seen to be red flags in prior projects where my team and I have been retained to confirm an embezzlement or asset misappropriation. And I want to share that here as examples of accounting fraud. So when there are lower than expected cash balances, let's say you look at your cash account or your bank statement and you're saying, I was expecting $500,000 today. Why is it only $2,000 or why is it only $10,000? Do not doubt your initial reaction. Believe it or not, that is usually a very true red flag of something wrong happening. What about the fact that your cash accounts or your client's cash accounts have not been reconciled on a regular basis? The appropriate internal control procedure for managing cash is making sure that your cash accounts or clients' cash accounts are reconciled on a monthly basis. What that means is the cash account per books is reconciled to the bank statement so that the difference between the two balances is clearly delineated based on different reasons. So it could be deposits in transit, it could be payments not yet cashed. So when you have an accounting manager or a CFO or an accounting clerk who is not doing this on a monthly basis, and then you suspect something bad is happening, then that is a good red flag to follow up on. And speaking of cash reconciliations, let's say they are actually doing this mechanically, but there's this unusual entries that seem to be there all the time. It's never been disposed of, because usually when there's a reconciling entry in 1 month, it's usually resolved in the next month because deposits in transit from the prior month have usually been deposited. So in conjunction with that, the potential fraudulent person might be giving the senior management or the the person suspecting fraud is occurring, implausible explanations for why the red flags exist. So my advice here is when there are red flags, it is usually a great idea to follow up on them. I unfortunately have worked on a number of embezzlement investigations, and unfortunately, most of them are in the nonprofit arena, where you have a trusted employee who has started small, figured out the internal control loopholes within the system, on top of which there are opportunities to commit fraud. And unfortunately, the fraud occurred over a number of years. And by the time we came in, $500,000 has been stolen, or more than $1 million has been stolen, if not more. And sometimes, believe it or not, the perpetrator can be the CFO and also can be a low-level accounting person. So it's rare. You can't really pinpoint who that person might be. It's whoever has that mindset of committing a fraud, especially when there is that opportunity to commit the fraud because internal controls in that organization are weak. So given that, I would like to conclude that we have met learning objective number 2 through my explanation of defining forensic accounting and accounting fraud with the support of slides 17 through 20. So with that said, as you have suspected, we are going to proceed to learning objective number 3. I feel great that we have accomplished learning objectives 1 and 2. So let's go to learning objective number 3. Which is using a case study. I would like for you to be able to recognize the application of forensic accounting in a litigation setting using a lost profits damages example. So this is an actual case involving a veterinary practice in San Francisco. The damages issue is the business claimed it suffered lost profits damages as a result of the defendant's conduct, which more specifically a breach of contract. The defendants sold the veterinary practice to the plaintiff, in addition to which they promised to refer business to the new owner of the veterinary practice. And unfortunately, as it turned out, and the jury agreed that the defendants, in fact, did not refer business to the new owner, on top of which they also disparaged her in the community, creating further losses in the form of lost profits. So what was the forensic accountant's role? I was the damages expert for the plaintiff in this case. So see how, going back now to the learning objective part of our presentation, having an opening like this is really good because I have given you a preview of what to expect, but without giving you too much. What is the case study is about what? A business, what's the issue, lost profits, and what is the role of the forensic accountant, damages expert, all of which support learning objective number 3 as your opening slide. So what we're going to do here is now I'm going to go back to the technical content and make sure that my presentation relates to learning objective number 3. I have already double-checked and triple-checked that the following slides are supportive of learning objective number 3. So now it's going to come down to how I present this to you. So when I receive in this lost profits damages case, the first thing to do is I want to first define what is lost profits. Many of you are likely asking, what does lost profits mean? This is what I told the jury. What lost profits means is it is essentially whatever sales was not made during the damage period, and the damage period is the period where the plaintiff claims she or he suffered as a result of the defendant's conduct. So lost sales, what was not earned, minus expenses not incurred, because what happens there is when you lose sales as a business owner, you also save expenses. So the difference between lost sales and what you did not spend because you did not incur the sales that you usually spend money on is your lost profits for the damage period. So let's illustrate that in a very easy example to start with. Before I go to the actual example, let's say for the damage period, the business lost $10 million, but it also saved expenses of approximately $4 million. The difference is the lost profits damages. I want to say right off the bat, when you lose sales, usually the expenses you do not spend during a damage period are variable expenses, the kind that change with the volume of sales, like cost of goods sold. Fixed expenses are usually not saved because fixed expenses are those that have to be paid regardless of level of sales. So for example, salaries of full-time employees, regardless of whether or not you're making a sale, you still have to pay those employees who are full-time, right? And this is exactly what we're experiencing right now during the COVID era, where businesses have suffered lost income. They're still paying salaries to people. So that is an example of a fixed expense. If they still have to pay rent, then that is an example of a fixed expense. So that's our definition of lost profits. So when I get a call for a lost profits damages assignment and we have the data, the first thing we want to do is verify, kind of have just a very top of the line, above the line, bird's eye view. If this plaintiff is claiming lost profits damages, I want to first look at what happened to revenue. So let's plot actual revenues first, okay? So what I did here, this is a combination of before and after method in the lost profits methodology for damages, also called sales projection. So the plaintiff claims that in or around this period, she suffered lost profits damages arising from the defendant's behavior of, number one, not referring business as promised to her during the negotiations of the sale of the business to her, compounded by disparaging remarks that the former owners made about her personally. So what I did here was I plotted actual sales on a yearly basis from 2012 to 2019. And sure enough, what did we see? We saw that from 2012 through the end of 2014 here, the business was actually growing by quite a bit, almost 17% revenue growth from 2012 to 2014. But something terrible happened here. Why is it? So before knowing anything else, the numbers say sales have declined and then started to pick up after 2017. So once I saw that, and this is after, of course, as forensic CPAs, we look at the financial statements. I gained an understanding of the business. I looked at the financial statements. I wanted to understand how do we interpret these financial statements. I want to make sure that they are they are reliable. There's no material errors. Can they be relied upon to calculate damages? And my conclusion was that they were. So given this initial take, I have concluded, let's move forward with the project because our initial evidence indicates lost profits was incurred. Because sometimes clients might claim something, but sometimes the evidence doesn't corroborate it. So it's a good idea to do this first. So what about the next step? I did want to say part of my testimony and part of my role, I ended up being the causation expert as well in this lost profits case. For some reason, the attorney did not have a separate industry expert. And as you might know, causation has to do with establishing evidence that but for the actions of the defendant, the business, the plaintiff, would not have suffered damages. Alternatively, were there any other reasons, possible reasons, that damages were incurred? So it became part of my assignment to eliminate any possibility in my research that there was anything else to blame besides the defendants for the loss. Okay, so what did we do? We essentially studied the industry. We learned that the plaintiff during the damage period and prior to surpassed the industry's performance in terms of gross profit margin. The industry that the plaintiff was in fact, the outlook was extremely positive, and the business itself possessed qualities defined to be successful qualities of a successful veterinary practice. So I'm not going to go into all of what I did here in the interest of time, but the point being, as part of my assignment as a damages expert, I addressed causation on behalf of the plaintiff to support my damages calculation. In addition to that, you can imagine, by the way, this was a huge fight in deposition, but I hung in there. I was firm in my research. I was determined to make sure that the evidence was stated in my deposition insofar as what we looked at and in trial as well. So I was satisfied that we did the research necessary to establish causation. So here, I do want to show that what we have done here is, this is the actual exhibit I presented at trial. Okay, what I said here was, look, number one, the forecast is the monthly red dots. You can see that up until this point, from here to there was an increase, but there was a sharp decline here, and then it continued to decline, but then it picked up a little bit slowly from mid 2016. However, we did a forecast based on past experience, which is this time frame, and using the financial statement, we did a forecast of what the growth would have been but for the actions of the defendant. And I determined that a reasonable forecast would have reflected at least a 3% annual growth rate through the end of July 2019. So what this is saying, and this is an example of a very good, effective visual exhibit of how lost profits was established. I did a forecast using and depicted by the blue line a monthly forecast, and we used forecasting technique, and using actual performance on a monthly basis, we plotted it with the red line. What is this space in yellow? This is exactly right, as you have determined, that is the lost sales. This is what the plaintiff suffered as a result of the defendant's actions. And so, very important, the concept of reasonable certainty, it is a standard that I made sure was met through my testimony and my work. We just want to make sure that none of this is speculative. I would argue that a different plaintiff's expert might have been a lot more aggressive. She or he might have made the forecast go up this way, making the lost sales much, much more. We determined that this is very reasonable. It was advisable, given the facts and circumstances, that, look, we want to just, how about if we just use a 3% growth from here to there, and show that there was damage, instead of being a little more aggressive, and some of the jury might feel uncomfortable about such an aggressive number. So that was discussed among me, the plaintiff, and the attorney as well, and I was comfortable with the conclusions. Remember, as the expert, I am the advocate for my opinion. I am to be objective and independent, as long as I'm comfortable with my work, and I feel that everything is supportable, and that is what we determined we were going to do. So, given that, now that we've established lost sales, okay, that we're not done. This is just lost sales. Remember, the damage theory is lost profits, meaning from this value, we want to deduct the equivalent of what would have been incurred as variable expenses and offset it with actual sales and loss and saved expenses. So given this, what is the next step? I explained to the jury that these are the steps that, these are the steps that I performed, and I had a different slide for each of these steps to explain what it is I did exactly, because it's very important that the jury visualizes what is it that Ms. Davis did to arrive at the $4 million damage number for the damage period. So it was important to me, and it's important to me today, that I explain in this presentation, how did I get to that $4 million damage period for the 54 months? So these are the steps. For every month, and I'm using February 2015 as the example, for every month, I calculated forecasted sales. So this is that blue line, okay? If we are to back up, you remember the blue line. I'm just going to do a page up. This is the blue line, okay? That is the forecast sales, and the red line is actual sales. So let's go back to the current slide. For every month, I took the forecast sales for the month. I deducted the actual sales. This is the red line from the actual financial statements, giving us lost sales for the month. But then you want to deduct cost of goods sold for every month. Cost of goods sold for the month of February was $39,000, and it is approximately 18.4% of sales. We did a regression analysis to determine what is the appropriate cost of goods sold to calculate for every month. When you deduct cost of goods sold from lost sales, because remember, the goal here is to make the plaintiff whole. What would have the plaintiff earned but for the damage, but for the event, but for the breach of contract? So I'm saying, but for the breach of contract for the month of February, the plaintiff would have earned $213,000 more in sales, but I want to deduct a reasonable level of cost of goods sold, giving her gross profit of $174,000 for that month. We do want to deduct more operating expenses. And this is interesting because usually operating expenses are also fixed expenses. I explained that that's already been spent. We don't deduct it again. However, in this situation, we determined that with an increasing volume in revenues, more hospital visits from critically ill pets, certain operating expenses are likely to increase. So we calculated that it is reasonable to deduct further another 35.1% of the lost sales here, or 74,000. So with that, lost profits from lost sales minus cost of goods sold minus operating expenses for the month of February 2015, we have lost profits of $98,932. We're not done yet, however, because we want to account for the fact that the value of an amount today is lower, higher than it would be in the future, and to incorporate the risk of actually receiving this specific amount. We want to discount it a little bit. And this is something that I applied my valuation expertise. It's a build-up method to determine the appropriate discount rate for the business. The 14.8% discount translates to this factor such that when you multiply the lost profits for February 2015 by that factor, we obtain $97,729 for February 2015 for the present value of lost profits. So given that we repeat this entire process for the 54 months in the damage period, which is February 2015 to July 2019, and the sum of the 54 months is $4,019,664. So this was a happy ending for the plaintiff. The jury ruled for the plaintiff and awarded the plaintiff the precise amount of damages I presented at trial, but I did want to explain, as the forensic accountant and damages expert, what was the expertise required in this project, that we demonstrated the ability to obtain an understanding of the business and the industry, the ability to interpret business financial statements and develop appropriate forecasts. This is a very important skill set. The forecasts have to be reasonable. Assumptions have to be supportable. The accepted methodology to prove lost profits has to be pursuant to literature and what other damages experts use. We addressed reasonable certainty and causation. And last but not least, we communicated effectively with the jury with very useful and easy to understand trial exhibits. We broke it down for them. I used plain English. The calculations could have been kind of confusing and too complicated because there was regression analysis. I mentioned the phrase regression analysis briefly, didn't want to get into it too much, but interestingly, one of the jurors did ask me about some of the outcome from that analysis. So it was a great experience altogether. And I also recognized certain cross-examination tactics, and certainly I withstood rigorous cross-examination by the defendant's attorneys, and I also testified on rebuttal when my opposing expert appeared to fabricate some facts that I don't recall having been addressed in any of the evidence I saw. So I actually offered to testify at rebuttal to make sure the jury was not misled by what I would say very careless testimony, and really testimony that had no basis whatsoever. And I made it a point to go up on rebuttal there even though it was not planned. So with that, the outcome, as I mentioned, the jury found for the plaintiff and awarded the damages of $4 million. With that said, I would like to offer that we did accomplish learning objective number 3. We used a case study, and you were able to recognize the application of forensic accounting in calculating economic damages in a litigation setting. So with that said, I do want to share some tips for what you do after you present. I would like to offer, again, stay available to your attendees. Your contact info should be in the slides either before or after the main presentation or both. I found it very, very useful to ask for feedback. Like, for example, I would ask the program attorney in CEB for feedback. How did it go? What adjustments would I make? Did I go over time? I think our time is reasonable, maybe an hour and 15 minutes. And I want to note any adjustments to be made for the next presentation. I do enjoy teaching, but I also want to know how I would improve what I did today for the next presentation, depending on the target audience, depending on whether I was supposed to have a shorter amount of time or if I could, go longer. Those are all good things to keep in mind. Again, feedback is really important. So with that said, here's my contact info. One of the things I like about this is it tells you, again, my name, my title, my position, my contact info, and my firm. So for you as well, making sure you include this information in your presentation. And again, having a way for the audience to reach you for any questions and comments. And I would usually also offer to be available. So similarly, I'm offering, feel free to call me or email me if there's something I can do for you. If you need tips on PowerPoint, I can put you in touch with one of my colleagues who's really good in PowerPoint and who's also been one of my go-to people when I am preparing something like this. So with that said, I want to thank you once again, members of the CMCP. Thank you to CEB for this opportunity to present to all of you. And if you have any questions or comments, I would love to hear them. And again, there's my contact info, and best of luck to your presentations. And I hope you found this useful. Thank you again. Bye-bye.